So our last call was January 29th. To summarize that call, I'd say on average, people felt it was still a tricky sales market. Buyers were starting to re-engage. Realistic sellers were starting to get bids. Rentals continue to be very strong. Some indicated that on the rental side, there was some price resistance at the higher end for stretched prices. But we'll see if the panelists what they have to say this time about that. This is our
Who's
I'm
got the
hearing
dog?
something. I'm hearing something. Just make sure you're all muted, everybody. This is our 48th real estate chat. Once again, we had about 300 agents register, probably more as of this morning. Please note that this call, like all other calls, are being recorded. I'll send out a recording along with the notes after the call, probably sometime tomorrow, maybe later today if I get to it. About me, my name's Phil. I'll be hosting the call today. I was a New York City real estate agent for about 20 years, but now I spend my time running leasebreak.com, a marketplace for shorter leases, lease breaks, sublets, rooms for rent. Basically, it's a lot of the type of apartments that real estate agents don't spend a lot of time on, and a lot of agents refer it. A lot of renters find some great deals that are usually not listed anywhere else. Okay, so let's turn our attention to our panel of experts, see what they have to say about the real estate market. This time, we're also going to ask everyone, and we actually were talking about it a little bit in the intro, how they're using AI in their work, and I'd love to hear from them on that front. And we also going to try to have them answer within 60 seconds because we have a lot of people on the call. And I'm also going to ask them to rate the sales market. We do this every session between 1 and 10. 1 is a raging buyer's market, and 10 is a raging seller's market. But first, as always, we have one of your faves, my faves, everyone's faves, Noah Rosenblatt. He's a data extraordinaire, I like to call him.
Oh,
And he's the founder of Urban Digs, a data analytics and market insights platform. Many agents on the call right now subscribe to his platform. I've always been a big fan of his. Many of you are big fans of his. We usually start with Noah, and what he does is he gives us a sense of where we are in New York City real estate, more from a data perspective, some data insights. And if we're lucky, he may even grace us with a chart or two, which he's been doing recently, which has been very helpful. So, with that intro,
yeah,
Noah, welcome to the
yeah.
call. And what are you seeing out there? What is the data telling us about the New York City real estate market?
Well, I'm gonna put my timer on for 3 minutes because I want to be respectful and get to the others in the panel because those are real-time anecdotes from top experts here. And yeah, Phil, you asked me to do a couple of charts over here, so if I do go over 3 minutes, I'm gonna blame you.
Okay,
Thank you
no,
very much.
no
But
problem.
I'm gonna talk fast. I talk fast anyway. But guys, what you're looking at right here is a 30-day deal activity chart. It's a liquidity chart. It's telling us contract volume. I am seeing right now, like literally now, I am seeing the best spring market since 2022. I don't know what
Wow.
the panelists are going to say. I have no idea what the panelists are going to say on today's call. They may contradict what I'm saying, but from my perspective, this is the strongest spring season we've had because we're sustaining ourselves at this high level. It's like climbing a mountain. The higher you get up that mountain, the gravitational force is pulling you down. It's harder and harder to get up that mountain. It's when you get high in terms of liquidity, you got to keep those deals coming in. And when you got inventory that's down 9% year over year, a tight inventory market, it's harder and harder to keep that liquidity, that demand at a high level. Yet we are. Over the last couple of weeks, it's caught up and we're at a warm market right now, which relative to the last 3 years is an improvement. And that's the basic thesis of what's going on. Now, does that mean it's crazy? It's a boiling hot market? No. I don't want to misconstrue what I'm saying here. What I'm saying here is that the last three spring seasons were subpar at best, and this spring season, even though it started late, is starting to show signs that it's doing quite well. When I look at deal activity in 2026 relative to the last 18 years, that's what this chart is showing. Look at the black line, guys. The black line. That's what I want you to see. That's 2026 deal activity. Now look at that tan channel. That tan channel. That's like basically all the years combined what the channel is. We're right in the middle. We're right in the middle. So I don't want to be aspirational. I don't want to say it's a seller's market. I don't want to say it's a hot market. It's not. It's not like that in 2022, but it's the strongest spring season since 2022. And I think that it's going to eventually lead us down the road to potentially a sales market getting out of its funk. It's still a little early, but the rental market is doing crazy, crazy, crazy things. The sales market's been doing nothing. And if this continues for
I
one more
agree.
year or so, you're going to start to have major rental exhaustion, and you're going to start to see the sales market start to come back. This, by the way, was an investment thesis we talked about a year ago. The rental market's going to go parabolic. The sales market's going to do nothing. And in 26, 27, it's going to end up being a situation where the sales market might come back. Now, really quick, you asked me to talk about rates. No more rate cuts, Phil. No more rate cuts. Rates are actually higher than it was 3, 4, 5 months ago. There's talk of a rate hike now, not a cut, hike in mid to late 2027. And I just want to point out rates have been going up while this market has seen increased deal activity. So there is not that much of a statistical correlation between rising rates and our market going negatively lower. It's just not correlated like
Hmm.
that, Phil.
Uh, no, one question. So it does that chart that shows the activity, one of the best springs we've had in a while, at least since 2022. Have you
Yes.
thought more? Have you looked at anything, how prices are changing? Are they going up? Are they going down? Have you
We're
seen
still
anything yet?
sideways. We're
Still
still
sideways.
suck
Okay.
right now. Now, what's interesting right now is that for the last 10 years, we've been in this channel for price action going up and down in this like tight sideways channel. I would not be surprised if in 3 months from now, when we get deals done today, like you signed a deal yesterday, I got to wait 3 months for that. Once we get all that data in, I wouldn't be surprised if we're starting to bust out of that channel just a little bit on the upside for the first time in 10 years.
Hmm.
But for the most part, sales sideways over the last decade.
Wow. Not ready to make the bottom of the market call yet, but
The
seems
bottom is
like
forming. The bottom with the
bottom.
rent, the rental market and the commercial market are leading indicators. The sales market is a lagging indicator, and the hot markets are the rental market and the commercial market. And that will ultimately, probably in another year or so, will lead to the sales market forming a bottom and probably starting another cycle.
Yeah, I mean, it seems like if the market's done nothing for 10 years, this seems to be a great argument agents can make that this could arguably be one of the better times to put money into New York City real estate, right?
Once the math starts mathing again and you start to see investors and developments come back, keep those rental markets and the commercial market going up, and the math will start mathing again. And the process is unfolding in front of our eyes. It's a 2 year process, and we're in the middle of it.
Awesome. Thank you, Noah. So we'll come back to
Anytime.
Noah. I'm sure people will have questions for him as we go. We have a pretty busy panel, so let's keep it going. So thank you. Now let's hear from our top real estate agents and experts and managers to get a more boots on the ground, finger on the pulse perspective. Let's hear also how you're using AI. I'm really excited about this one. Remember, some of you may not be using it at all, and that's okay. I'm just really curious. Let's just get a sense. And also don't forget to give me your 1 to 10 ranking on the market, one buyers market and 10 sellers market. Okay, so I'm just going to go by who I see. Hopefully, it's the order you came in on. Mark D. Friedman, if you don't mind going first, what are you seeing out there right now?
Oh, that's a lot of pressure going first and following Noah. Listen, the numbers don't lie. Noah's correct in this. We're seeing one of the best spring markets in a long time. I've been incredibly busy. We're doing deals left and right. So yeah, that's definitely happening. As far as AI, I gotta say, I'm not really using it. I'm still old school, and I'm not. I know people shake their head. I want to do it. I keep on thinking about doing it, but I find every time I think about doing it, I say to myself, all that water to use those machines, and it really, I got 26-year-old daughters who are constantly telling me about what's going on with the AI, and it's not good. I mean, people were upset when they found out how much water it used for almonds to make almonds. That was nuts. This is way beyond the almond thing. But listen, it's coming down the road. We're all going to have to use it.
Mhm.
So yeah, I think if you're not using it right now, you're a little bit behind the times.
Right, right.
But that's the thing. But let's talk about the pied-à-terre tax. You wanted to talk about the pied-à-terre tax, right?
Well, yeah, if it's something you think is affecting the market in any way, yes.
I don't think it's going to affect the market at all, actually, because honestly, the tax code is in such a way you would have to revamp the whole tax code in order to get this pied-à-terre tax going, and that's not going to happen. So it's great that they've made this in place, but to actually figure out how to charge these people, based on that, it's going to be very difficult.
Hmm.
So I don't really see it affecting it. And if they end up figuring out how to do it, I don't think people who have a $5 or $10 million hit a tear are going to be they're going to pay it because they want to be in New York. New York is still a vibrant, fantastic city with the New York Knicks and the Yankees and everybody else, and Broadway is thriving. So, there's all of that is still going on, and the restaurants, there's a brand new restaurant coming out every other minute, and it's better than the last one. Everything about New York is just booming. So to say that you're all going to move to Florida, I don't buy it. I just don't buy it.
Great. Yes, thanks, Mark. And Mark, did you give me a rating? Curious what you see, 1 to 10. One is
Uh,
buyers, 10 is sellers.
As far as the market's concerned, I'm seeing the five. I'm
Still a
seeing
five.
it's
Okay.
pretty it's
Okay.
pretty even. There's
Okay.
there's definitely some give and take on both sides, but depending on how you price it,
Yeah.
it's going to sell. And this is everything is selling right now. People
Okay.
people are getting into contract.
Thank you. Thank you, Mark D, very much. All right, next on my screen, even though I don't think I think Antonio came in first, but Fred there. Fred is the one next on my screen, so we got to go Fred. So, Fred Peters, what are you seeing in the market right now?
Okay, I'm going to start by saying, like Mark, I would say the market's a five. It's, there's pressure on buyers, there's pressure on sellers. The buyers are still experiencing minimal inventory in many parts of the market. The sellers, even though the inventory is low, still have to price right in order to attract attention. We're still in a marketplace in which mint sells and needing a lot of work lingers. And the price that needing a lot of work requires is less than the cost of the work because people are also factoring in the time, they're factoring in the ownership of multiple properties while they do the work. It's still very complicated to sell the non mint apartments. I would say that as far as the pied-à-terre tax goes, it's particularly challenging and I think hard to figure out how they would implement it, again, to echo what Mark was saying, in the co op market. Since in the co op market, you don't actually own your apartment. You own shares in a corporation. It's the corporation that owns your apartment. And how exactly the taxing authorities would get to that is not clear to me. I agree that the market has been very busy. I agree that pricing has been flat. What I think is an interesting side point to what Noah said is that we have a whole generation of buyers in the market now who have never seen real estate appreciate. And that creates a completely different dynamic in the way that you talk to them. Because, in my generation, you could talk to people and say, you're at a perfect moment in the cycle to invest and see your asset appreciate going forward. These people are not at all convinced that that's the case. They don't know if their asset is going to appreciate in the future because essentially, with a few peaks and valleys, their asset hasn't appreciated since the recession. Um, And so I think we're dealing with, and it really requires skill from us as agents, we're dealing with a generation of people who aren't confident about whether or not their investment is going to turn into money for them over the arc of time. And the last thing I will say is whether we mean to do it or not, we're all using AI because it's everywhere. It's in our search engines. It's here, it's there. And, what I'm hoping, as I was saying before the meeting started, is all of those bozos out there who think that AI can write their recommendation letters should at least read those letters and try to make them look as if they were written by a human who actually has some knowledge about the person about whom the letter is being written. And at that point, I will say that beyond that, no, I'm not using AI. I'm old. I'm confident that I won't be using it in the future. And if the market is going to pass me by, God bless it. Thank you.
I wonder if you said the same thing in 1995 about the internet, but maybe
was
not.
Totally on. You check back, Phil. No, seriously.
Actually, we have a clip. We have a clip.
I was one of the
Roll the
first
tape. Roll the tape.
people to talk about how the internet was transforming our business. You can find clips of me literally from the early 2000s. I will send you one in which I'm talking about the fact that our role is changing from being gatekeepers to information to being trusted advisors.
Mhm.
And I was actually on that bus before almost anyone else. So put that in your pipe and smoke it, Mr. Horigan.
I believe you, Fred. I believe you.
Hey, Phil, would it be okay if I go, because I may have to jump out and I don't know when that's going to be?
Absolutely, yeah, sure. And then we'll go to Antonio. Tony, I hope that's cool with you. So,
yeah. I'm sorry, Antonio. Thank you.
So, Scotty, what do you got for us? I think he's going to disagree on the AI just by his body language, but we'll see what he has to say.
Just by the finger wagging. No, well, first of all, I'm reporting to you from my virtual backdrop of 161 grand in Soho. To the point of the market of what's going on, I had erroneously priced it at 3.5, 1830 square feet. Seemed fair enough. We were getting some traffic, but not enough. I just dropped it at 3.25, and it's the busiest week, that we've had. So to the point about pricing it correctly, absolutely. Have to price it correctly. And also, please come by 161 grand. It's fabulous. But anyway, aside from that, to the other point about the market, I had in need of a lot of work, fifth floor walk up on Charles Street in the West Village. So obviously great, but always concerned, how do you price it? And are people going to want to do work in a fifth floor walk up? Zero issues. I think maybe 2 weeks, multiple offers, all of that. I'm now listing, as a heads up, another owner on the fifth floor, also in need of work, same thing, wants to list it, and we're going to be listing it next week. And it's going to be around 680 or something like that. So that'll be a good indicator also of what's going on. But I agree, it's a pretty healthy spring market. I've had buyers come a little bit out of the woodwork just to, that I thought were kind of dormant or settled. And they're like, yeah, we want something different. And they're out there looking. So in terms of the market, I would say, I could say 5. I think I said 4 last time, but again, it's all dependent of where you are, the neighborhoods, the types of properties, all of that stuff. So it's hard to really assess it broadly, but I think 5 is fair. I want to say something quickly about the pied-à-terre thing because it gets a lot of press. We don't actually know what it's going to be. What's the dollar amount? Are we talking about $1,000 for somebody who owns a $5 million place? Are we talking about 10,000, 20,000? Like, how does that all work? When it actually, if it becomes law. And then also they're talking about like the value. So if you've owned something that's like 3 million, how do we know for sure that it's 5 million or not? Like it's all like, it's very weird. So I don't know how they're going to do any of this. I think it does scare people. And then of course, we get stupid emails from friggin' Florida brokers. They're like, hey, if you want to send any clients down here, I'll give you a 40% referral fee. Get the hell out of here. About AI. All right, Mark, are you listening? Fred, are you listening? It's not as big and bad and destructive as you think it is. Maybe for the environment it is. But here's a couple use cases, small use cases that I use it for. I had to explain the FAIR Act to somebody, but I wanted my branding on it. So I had AI create a branded explanation of the FAIR Act with my branding, my name, whatever, as an attachment and a JPEG that I could put in the email so they have an understanding of it. I also did a buyer's guide with the same thing. And also I review all of these things and make sure they're accurate. I've done the same thing for a rental guide. Like, hey, here are the requirements. Things go very quickly. Here's, maybe an example of, what you would have to earn, for an apartment, things like that. Everything you need to know. I just told AI to come up with something like that. And I've used it in other like small use cases where maybe normally I would have an assistant to create a PDF or something like that, whatever it is. I have AI do it and I proofread it. And then I also interact with it to change it, to get it to say exactly what I want to say in my voice. And the other ways I've used it, believe it or not, is to better explain things like a marketing, marketing strategy. So I may come up with one, but through my firm, but then I may put it in and say, hey, explain it this way or something like that. And that can be very helpful just to see like what is my firm missing in terms of the buyer or the seller understanding, what this is and how could I make it better. So I use it in those ways, and I'm not using it in a much larger nefarious way. Those are very use cases where typically maybe an admin will do it. Well, I'm sorry, they don't have that job anymore. Sorry about that. But that's it. I think you can use it in small ways. There was one time I did a rental listing though, and I was writing the description, and then I'm like, you know what? It's a friggin' rental. Write this, but in the voice of Joan Didion. And then they created a listing description for my rental in the West Village in the voice of Joan Didion. And I got to tell you, so many people were like, that just, it stuck out for me. The listing stuck out. I mean, ultimately, it's not what drove the fact that there were 8 offers over asking. It's just, that's the rental market. But it was kind of fun and cute. And I got to, play around with it a little bit and add and subtract. So I just wanted to mention that, and it's great to see the panel. Great to see you, Phil. Thanks for putting this together.
Of course.
And
thank
Noah,
you,
as always, thank you for the data that we don't get anywhere else.
Mm-hmm. Thanks, Scotty, for that other perspective. By the way, just quick aside, that's how I use AI. It's like an assistant. That is exactly how I use it, and maybe a lot of people do. So thanks for that perspective. All right, let's move on to Antonio. Thanks for your patience. Antonio, what do you got for us?
Absolutely. It's always good to hear, to follow Scotty. He always makes me smile. I did read that description. I got a kick out of it. And I've done descriptions like sonnets with Shakespeare. I love AI. Actually, my team and I use it all the time. Although I'm like Fred, I met Fred a long time ago. Over 20 years ago, and we were talking about literature back then. And I do say to all the young people and my team members who are all younger than I am, not to replace yourself, right? Meaning, don't stop writing, don't stop being creative, because you got to practice that muscle. and AI can't do it as well as you can. Your voice cannot be replaced, and if you don't use that muscle, then you don't use it, you'll lose it. So I like using it. For instance, I would take a snapshot, like I watch Noah's YouTube all the time. When he shows a chart, I take a picture of it and I have AI analyze it, and it explains even more elaborately than Noah can. But no one can replace Noah, right? And I sometimes would talk to AI about how property can move faster, how a buyer can benefit. I love what Frederick said earlier, Fred Peters, about how this is the generation they don't see appreciation, but there's also the deductions. There's also the equity buildup. And if you hold on to it long enough, it will appreciate. But there's a lot more. I mean, this is where we are. It is a broker's market that we can educate our buyers more. So where am I? I was at 4 last time. I'm still at 4 towards the buyers. Why? It's because it is not going up. The prices are not going up. Same properties on the market last time. I tend to go between 1 to 2 million. A lot of my buyers, I'm seeing about 10-20% lower. Interest rates are not going down, as Noah said. That affects it. The war, the up and down of the Dow Jones, it's not helping. So many buyers have turned into more of a renter, right? So it's very important that we keep educating people about the market. So the big thing is this. I ran into a renter overly qualified for a $7,000 exclusive listing my team has, and they were going to buy, right? But they turned it into a rental, and they earn a couple, 28 and 29-year-olds. They earned $1.2 million a year together, and they have $3 million in the bank. It's incredible the kind of people we're attracting in the city, and they'd rather rent because it is important that they see the appreciation, that they think they can get more money, more ROI out, on other markets. So, and it's true, but there are other benefits that I educate them about buying. So the other thing is the pied-à-terre tax. The pied-à-terre tax. This is how it's affecting my buyers. So I have a $6 million, $8 million buyer. They are now they're resident. They want to be resident of New York instead of having it as their second home. They used to be resident Florida, some of them New Hampshire. There's no tax there, but now they want to become resident because, like somebody said earlier, it doesn't matter what you do in these blue cities. They don't want to live in the places where, I mean, there's not a lot of the arts and Chicago, Boston, LA, San Francisco, New York City, top of among them, is really the place to go, right? So, and the talent is here. That's another thing. Ken Griffin that Mamdani is picking on will keep building here because the talent is here and he wants his company to get to expand more. So Amazon is here. They said they weren't going to build it. They're here because you see it, all of you in the trenches. You see the incredible talent that is here because they want to be here for the culture and for everything that is New York. I've raised my 2 boys here, and there's no better place to raise our children. I think I addressed everything. Yeah.
Thank you. Yes,
All right.
thank you,
Thank you.
Antonio. Thank you so much. I appreciate it. Before we get to Dan, I just want to say there are a bunch of questions in the chat. If the panelists, some of you are already doing it, but if you wouldn't mind just answering some of those, I think that would be helpful. Okay, Dan Marrello, and one would love to know what's going on from your perspective. Also, Dan, if you could hit on rentals too, since I know you have a good insight into the rental market, would appreciate that.
Yeah, of course. Before on this call, I said you were going to ask me how the market is, and I would say average, right? Because if you're looking at where we are in terms of seasonality or whatever, and I think Noah's chart, being that we're in the middle of the tranche there, says we're average, right? Yes, it's the best spring market since 2022, but the last 3 years have been crap. So yes, it's good. It's better than it was. And it's also another word I wrote down was resilient. Despite everything going on in the world right now, the market has shown resilience, in my opinion, especially in the last 2 months. The townhouse market seems to have sort of renewed energy in Manhattan, um, which is, I think that's a product of lack of inventory for larger properties, and then also the value in townhouses. It's almost like this renewed interest out there. As far as AI is concerned, what I use it for as a manager, a lot of times is policy research, also comparing legal contracts. I'll upload two different things, especially if we're getting red line versions of things. Agents are using it all day long for virtual staging and a lot of marketing stuff, whether it be just for ideas, descriptions, etc. What I'm really scared about AI is that's what's propping up the stock market, right? A lot of it is propping up the stock market, and I fear a crash, a bubble. And I think if that happens, a lot of people aren't going to feel as rich as they do now, and we may have a pause. As far as, Noah talking about the market having a great 26, 27, I don't disagree with that. And I think prices will rise. The problem here is there's nothing in the pipeline for new supply, and we're already on limited supply. As far as the rental market's concerned, I mean, everybody said it in here. It's kind of insane. It's like if you price it, they will come type of thing, or price it whatever you want. Things are getting more than I've ever seen. People just applying up for apartments and don't even want to see them. Like I don't even need to see it. I'll just apply for it, which is kind of insane. Um, how I would rate the market, I would say it's a 6. Yes, it's average, but I would say we have less supply. We have about 10% less supply than we did last year, but more demand in the market. So I'd say it's definitely swaying a little bit more towards sellers right now. And if it's priced right on the sell side, you're selling it. And that's what I got.
Awesome, Dan, that's great. I don't want to steal Brian
If I can
Morgan's.
just
Yeah,
say
go ahead.
one thing in response to Dan, it's going to be really interesting to see how the open AI case in California gets resolved. And that's going to have a lot to do with what you were just talking about whether or not this looks more like a bubble than it has up until now.
Yeah.
Yeah, and I mean, some of
Yeah.
the things I've been hearing is just the amount of money that they're spending building out infrastructure. They would have to be the profits they would need to recoup this are astronomical, and it's just not there. So I don't know. I'm not an expert, but it seems scary.
Well, they also say that about 2/3 of GDP growth is AI. I mean, so like we're basically growing as an economy because of one sector, which I think is could potentially dangerous. We'll see.
A
We'll
lot of
have to
our
see.
eggs are in one basket right now.
Yeah, exactly. So I was going to say before, I don't want to steal Brian Morgan's thunder because he may talk about this, but Dan, do you think is the Fair Act at all playing, in your opinion, is it playing at all into the rise in rental prices? For those listening, the Fair Act is where a listing agent can't charge an incoming renter a broker fee for a property they're advertising. Dan, do you feel like that's coming into play at all with rising prices, or
I,
is it
I
something else?
think I think every policy that's been enacted since 2019 has been played into why we're here right now. Okay, we have no inventory out there. You have rising costs. Absolutely, the Fair Act has something to do with it. If we had more inventory, maybe landlords, of course, wouldn't be able to charge the rents they can right now, right? So I think every single policy in the last, call it 8 years, has done the market bad for
Hmm.
consumers and
Right.
tenants
Thanks,
and
Dan.
landlords, obviously.
Thank you, Dan. Okay, so next we've already talked to Noah, talked to Scotty. All right, Brian Morgan is up. And Brian, what are you seeing out there? And I know you know rentals as well. So if you could say a little bit about rentals, that'd be great.
Yeah, no problem. The rental market has been, as Phil and I spoke the other day, it's been rather wild. Again, I'm kind of seeing some of the things you guys are saying. Multiple, I had, well, I know Phil likes anecdotes, so I'll give some. I had in my in a building that I own in and I have listings in, I worked in a while. There are apartments right now that have I have 13 applications on one apartment, and it's priced to last year's price. Because when I initially listed it, I thought the market would be a little bit better. They said, listen, let's be on the safe side. Let's list it a little bit lower. Let's get a lot of choices. I want to make sure I have a really good tenant. Sure. So we priced it at last year's prices, 13 applications. I have at 150 people that have reached out to me on this listing. We can't even get them all in because the tenant, it has restrictions on showing and things like that. I have another one on the Upper East Side. I put a co-op on the market for $9,000. It's a 2-bed, 1.5 bath. I couldn't stop the emails from coming in. It was so bad that I had to raise the price within an hour. I raised it $1,000. So I went from 9,000 to 10,000 in about an hour and a half just to stop it. So, and we showed it yesterday. We already have people, we had one window of showing, only one day, and we already have like several people that are submitting applications.
At the $10,000 number?
The $10,000 did not scare people, no problem. I mean, some people it did. There was some people like, it's just not in my budget, but plenty of people like, doesn't even matter. So yeah, Phil and I had this discussion the other day. I do think the FAIR Act has definitely part of this, and maybe a lot of it more than I think Phil thinks, but I also think it's a lot of things since 2019 that Dan had said. I mean, it's all of these policies that are driving this, and I also think higher interest rates are driving this. I don't think like the some of these properties, people are on the sidelines. I know Noah doesn't like to link interest rates with the sales market, and I think it really depends on the product. And some of the products that I'm renting, I do think these interest rates have an impact on the market, along with the higher taxes, along with the common charges going up. To Noah's point, the math doesn't math still on a lot of these sales products. Now at the higher end it's different, but I'm talking about sub 2 million. A lot of the condo products just don't math. Now they're starting to math on the co-op product. You're starting to get it to a place where like, oh, the prices have come down enough where this is starting to make sense again. And then the theory that Noah Newman, had talked about, I guess a year ago on Noah Rosenblatt's podcast, could really come to fruition if these, rental prices keep going up and the sales prices remain flat. I think it could happen, and then you'll finally see that move on the sales market, more on the sub 2 million sales market, because as Antonio said earlier, and I give it a 4 as well, and it's because yes, we're seeing activity, and from that standpoint things feel like maybe a 5 or a 6, but at least under $2 million, which is most of the products that I have on the market right now, I'm feeling more like a 4 or a 3 because the price action is just not there. And you speak to sellers, they're not going to feel a 6 under $2 million. Now, luxury market, things that are in mint condition, absolutely, you're gonna feel that, but not. So it's a fragmented market. You're looking at a lot of different markets within one market, and it's good to have different people on the panel, whether it's the rental market, the sales market, the high end market, the low end market. Everything is different. New York is like 15 different markets in one. And then of course you have Queens and Brooklyn and everything else. So it's a lot going on out there. As far as the AI goes, I'd be more worried about a 2001 Space Odyssey movie than I am about climate, but that's just me. Robots could be taking over the world, before we know it. But I'm embracing the AI with the unknown. There's so much unknown about it. I think the costs are unknown. Everything it's could do in the future is just, us as real estate brokers, we're not deep in this stuff. We don't know enough. I mean, maybe we read an article here or there, but we just don't know where it's going. And yes, it could be scary, but it could go the other way. There could be a lot of great things in the future that AI can do for the world. I don't pretend to know any of this. What I can tell you is that from my standpoint, it makes my job so much easier in a lot of ways, whether it's writing emails, writing ads. I mean, I used to spend like 40 minutes just to get the email perfect. And I could write a few ideas down of what I'm trying to say and put it into the AI, and it will come up with something in 5 seconds that used to take me 20 minutes. So in that sense, it's really helpful. I think there's so much that, I mean, it's a busy season for everyone, and like, I don't know, someone was saying before, like, I haven't gotten around to the AI. Me neither. I haven't really dug my head deep in it, but I think we need to, because it's here. It's not going anywhere, and I think it has a lot of attributes. Maybe not in the future, I don't know, but at least right now that we could use to help our customers, help our team members, and just help with business in general. So that's my feeling on
Can I
AI.
add one thing, please?
Go ahead, Scott.
Because I left this out, and it may help people like Fred and Mark. Sorry to single you out, guys. Every day, so I use Claude and I use ChatGPT. You can use whatever, but every morning I say, please give me my. I sometimes do say please, but what's my daily real estate briefing for today? And I can be in New York, it can be national. Sometimes I do both. So I get just like quick news stories on real estate about what's going on. And so that becomes very helpful just to make sure I understand the market here, but I also want to know what's going on nationwide, top 10 cities for growth, things like that. So that's a really good, handy way to do it. And I don't think, and I think that could add a lot of value actually without going super deep into AI.
Something
That
else
is a great
I
tip.
just want to touch on real quick.
I'm not saying that I haven't used AI. I'm just saying that it's just pay attention because it is terrible for the environment.
No, I agree with you, but I know we have a front row seats to the apocalypse here in New York, but there's that's going to be maybe 100 years from now.
That's only a few years away, the apocalypse.
And
So we're living in the moment.
To not
No.
use it because of fear of things that we don't know about is I don't think that's the right move. It's here. You're just hurting yourself.
Yeah.
Oh,
You're not going to solve the environment by not using
we can
AI.
we can have this part of the argument.
No, this is the fun
Offline.
part.
All right. So wait. So
Phil Horigan, Scott Harris here. Just want to make sure you know I'm here, and you've put my note taker. Speaking of AI, put my note taker into the panel instead of me.
yeah, just so you know, what's even scarier is that I tried to remove your note taker 4 times, and the AI refuses to remove itself. That to me is the whole point of this discussion.
That's how 2001: Space Odyssey. You've never seen.
But anyway, no, I hear you, Scott. You're here, and I know you're here, and I have. So actually, it's going to be Naomi, William, Bolls, and then Scott, and then Nikki. That's the order I have on my screen here. So let's go with Naomi. Love to hear from you. What are you seeing out there? Oh, you're on mute though. Oh, wait.
Here we go. Here we go. I'm
Great.
here. Okay. Hi, everyone. It's so entertaining to hear everyone and see everyone again. Thank you. Starting off with my number. My number is 6. Why is my number 6? I think that it is a little bit more of a seller's market than a buyer's market. In my personal experience, I have had multiple bids in every single offer that I have submitted. And it's been very challenging. If you price it right, it will sell and very, very quickly. I had 2 Brooklyn listings sold within by the time we didn't even get to the second open house and we already had a signed contract. We went well over ask on both properties. We also had 2 rentals. We started at, I think, $89.95 or something like that. We couldn't even handle the amount of people that came to see the rental. It was in Tribeca. It's really a 1-bedroom that can be converted into a 2-bedroom, but it's not really a 2-bedroom, but you can convert it. And we went well over $10,000. Like, it was insane the amount that people were like, okay, I'll give you another, $3,000 a month. I'll give you whatever just to get this apartment. And so yeah, it was very, very, very busy. I had a smaller 1-bedroom in Manhattan, and I rented it actually even before listing it. When I listed it, it was pretty much already taken. Also, we got over ask, and that was before even listing it. So I was getting offered more money. Just don't list it. I'll take it. So it's been, yes, a very extremely active market for both buyers and sellers. I think the sellers have a little bit of an edge because buyers are just, there's so little inventory that people are just going over ask because they just want a place to live, whether it be renting or whether it be buying. So that's what I'm seeing out there. Also, with AI, I do use it almost on a daily basis. I think I still have a lot to learn. I think it's a tool that could really be utilized to make work more seamless, really provide more in-depth details or information or ideas that maybe we don't think of. So I think it's fascinating. I would love to take a course. So I'm looking, if anybody has one they could suggest for me. I'm really looking into taking an AI course because I think it's something we are all going to be faced with at some point. And there's so many different platforms and so I think yes, it's here to stay, just like internet, just like our iPhones. As much as sometimes I hear people say, "Oh my God, this phone, I can't stand this phone." So thank you, Phil, for putting this together. I'm very excited for the next few months before it all shuts down before the summer. But yeah, it's been really busy and exciting. Oh,
Thank you.
and by the
Yeah.
way,
Yeah.
I'd like to say a shout out to my son Joseph, who got engaged. He's getting married this summer, and his fiancee Beverly. I'm so excited for their wedding. So thank you.
Congrats to Joseph. That's amazing.
Thank you.
Naomi, as far as AI, Caroline Bass is in some kind of AI academy. So reach out to her. She can
I
maybe
love
give you some.
Carolyn.
Yeah.
Okay,
Yeah.
if
Yeah.
she's on
Okay.
here, I love you. I'll reach
She's
out to
I
you.
think she's in the academy right now. That's why she's not on the
Okay,
call. She
cool.
might be joining late though. All right.
Thank you.
Sure, anytime. William Bolls. Love to hear from you. Also, William works Connecticut too, so it'll be interesting to see how different that market is than the New York City market. What do you got for us?
Hello.
Hello.
Connecticut's always different. Connecticut actually has a sort of it's many different markets like everything, but very inventory constrained and continues to be sort of like nationally one of the hottest markets. A lot of that activity is over West Hartford, all that, but we have very low inventory in Litchfield County. That's where I live. And our spring market is here, which is great. It came a little late because the leaves and the flowers came a little late, but everything is good with that. Couple of things. So, Phil, I hate it when you ask us to give one number because the market, there's just so many markets. So I'm going to give you two numbers. The well-priced move-in ready things, it's an 8. The everything else is like a 4 because everybody wants the same thing always and forever. One of the things that I'm telling clients when we're pricing in the city, you need to capture your buyer in the first 3 or 4 weeks. Otherwise, you're going to sit for 3 or 4 months, and it's just the way it plays out. And to me, that's just supply and demand. The couple of quick stories. I have two landlords. So 22 years in the business. I just have accumulated a few solo unit investors. Two of them are cashing out. They're back to the like nothing's appreciated in 10 years. Their monthlies keep going up. It's just not making fiscal sense for them. So I thought that was interesting. That just happened within the past 60 days. And then just a quick pricing story. So back in '08, I was selling. You were too, Phil. We were in the same office. And I took a really good sales training course from a guy that I can't remember. But when we thought we would never sell anything again, I went to this training course. And the thing that I really took away from it is there is a price for, no matter the market, there's a price for everything. And you have to get down there and find them, right? So I sort of accidentally overpriced something recently, did a pretty significant price reduction, immediately found the market. And of course, I got a phone call from an agent who lives in the building. What the hell have you just done? You're creating a terrible comp for me. And I'm like, buddy, it's the market. Like, so anyway, I just thought that was sort of interesting because it is true. You got to get down there. Your buyers are there. You just got to be where they're playing, right? And then AI, like, I'm turning 60 this year. I'm trying really hard to keep up and not be, caught in my old ways. But I am using it quite a bit for we all get those questions where you know the answer and you don't want to take 10 or 15 minutes to type it out. And some of them I have templates saved for, but the ones that I don't, I just put it in, and I gotta tell you, it's pretty good what it comes back with. I skim it and make sure. And I always just, I even make a little joke about it, like, this is AI. Hopefully I still have more to add, but at least this gets the conversation started. And I find that people take that well. I'm also responding to my clients copying and pasting AI a lot because we work with really smart people. And this has been going on for, almost a year at this point. I'm getting annoyed with the time that it's taking me to go through and like give a thumbs up or thumbs down to everything that AI is doing, but most of it's good. Most of it's good. All right. I think that's what I got for you, Phil.
Awesome. Thank you so much, William. I'm gonna offline. I'm gonna get an exact number out of you because you're right. I don't like two numbers. You're gonna have to come up with one number. Otherwise, it ruins all the
Then it's a
statistics.
five. Then
Okay,
it's a five.
fine, fine. Do your five. I'm kidding. Thanks a lot, William. All right, so we got Caroline there, but we're gonna do William. I mean, no, Scott Harris is next. Scott, buddy, we got you. We still got your note taker on there. I can't get him off. I tried 100 times. But I'd love to hear what you think is going on in the New York City market. You're on mute still. Might be able to mute you though. Let's see. Pass to unmute. Let me see.
I was having a little trouble finding the unmute button. Hi, everybody. I'll try to keep this very short, and a lot of what's been said has been said. I'm going to start with the AI and first say that I am using AI certainly for efficiency as much as I can. I mean, just in terms of, like we said, taking notes for meetings and able to actually be more present with buyers. The notes get taken. I don't accidentally write, my handwriting is terrible. So sometimes it's great to just listen to what buyers ask questions when you're having like intake meetings on Zoom. And then ultimately, all that information gets put into our own CRMs and things like that as we track information. So I think that's really, really handy. But definitely, it's been a game changer as far as email efficiency. A lot of people reach out and just responding to agents more quickly. It saves me at least an hour. I bet it saves me an hour a day on email response time. Never mind all of the others. But for those agents out there, I don't know if anybody's ever had a bad day. They wake up in a bad mood. They're like, oh my God, the market, this, that, and the other. AI has been a great therapist for me when my therapist isn't available for a quick call. So, I hopefully you guys are laughing there. But no, it's actually really helpful to kind of think through these things. In terms of the market, I'm going to disagree in a friendly way about the unrenovated properties. I'm going to give the market a 6, maybe even a 6.5, in the sense that for a long time, we were seeing unrenovated properties not move. And as long as the maintenance is reasonable and it's a location that people really want, there's enough of an inventory shortage that qualified buyers are jumping on properties. They want to be here. And I think that really it speaks to the strength of the market and really the low inventory, but people really want to be here. I think I think pied-à-terre buyers are a little bit more concerned about I give it like a 5% chance of actually doing anything in terms of this pied-à-terre tax, but I think it's noise and it's creating a little bit of uncertainty. But for people who are, of course, primary home buyers, which is the vast majority, it's not even a second thought. The market is extremely active. And I think a lot of that is the talent of agents who are getting sellers to price things accurately. But long ago, you may remember that Noah said something about a floor really coming underneath this market. I think the floor is here. I lost about $15 million of bidding wars last week alone. And, not to say we didn't win some, but it's very much an active market and pricing is pushing up. Even when I have a listing off market, if I show it to a few people, I may end up with a bidding war before it even goes to market. We're just seeing a lot of activity and it's very encouraging and buyers want to be here. So I don't have anything else to add other than I would say the market that had been a little slower had been kind of that 2 to 4 million before we kind of got the luxury area. I'm seeing that just on fire. Even if mortgage rates are going up or potentially going up, people are ready to move. And when things come to market, not aspirationally priced, it's like a feeding frenzy. So I'm really encouraged about where things are, and on all fronts, I think this market has got some room to run.
Great. Thanks, Scott. Scott, you quite famously in one of our other Zoom calls, this is why it's so important to listen to these Zoom calls, called the bottom of one of the markets. It was like 2 years ago in December, and like it was like a mini bottom, and it kind of exploded from there. And I remember that. Are you ready to call that a bottom now? It sounds like you're close, but I don't know if you're quite ready.
I wouldn't say that. It depends on what we're talking about, because I think it depends on the seller, whether they got the memo that the market, but a lot of sellers are like, look, I'm ready to move on. And as much as Dan or anybody might be concerned about the concentration of growth in the stock market, people can take their money out of real estate if they're ready to sell here, and they can make money somewhere else. I think a lot of people are ready to capitulate. So buyers, if you're on the sidelines, like, get out, get educated, work with your talented agents, the people that either on this call or whoever you're working with, and make sure you're getting out and making offers, because you'd be surprised at how flexible some sellers are.
Great. Before we get to Carolyn and Nikki, one more question for you, Scott. You meant this. I think other agents would benefit from this. You mentioned that you take notes during calls with buyers. Do the buyers push back on that a little bit? Some of them are uncomfortable. I'm just curious how that dynamic works.
Not at all. Buyers are thrilled. Buyers want you to like, I hear you. I'm with you. I'm listening to you, and I'm taking notes just to make sure that I don't miss anything. No, I don't know if you all remember 5 years ago, if somebody put a calendar appointment on your calendar, you're like, what did you just do? You made a calendar, you intruded on my calendar. And now it's like, can you please make me a calendar invite? Please, can you do that for me? I mean, it's a completely different world out there. And I think it's wonderfully efficient. If you can find the ways that takes off the annoying parts of your life off your hands so that you can really be the best human, I think look for those opportunities everywhere you can. And I think you'll be a much better agent.
Great. Thank you, Scott. Thanks very much for that. All right. Caroline Bass, who is literally coming from an AI class. Again, literally coming from an AI class. We'd love to hear your thoughts on everything, including AI.
Sure. Oh my gosh. Okay.
Are we all going to be alive? Are we all going to be alive in 2 years?
Yeah, but I don't know if that's the person you're going to be seeing online. Sorry. I don't know. Maybe you want to mute me again. My goodness, it's loud around here. Okay. Yeah, we're all going to be alive, but my God, the images you're going to be seeing are likely not going to be of a real person. It's a little scary. The seminar I was at was by Brian Scott Cohen, who works for Guaranteed Rate, does my mortgages, and it was about basically AI marketing and how you can use AI to better your market yourself as an agent. And there are some really interesting things. I mean, I use AI. I'm a huge proponent of it. I've seen a lot of positive things from it. I'm not against it, but I think everybody just really needs to think critically about how they're implementing it and just making sure you still have a hand involved in it. Whereas there's a lot of things where you could turn things completely, especially with this Claude co-working. That was a lot of the discussion was about Claude. In regards to the market, I am seeing this sub $1 million market. I have never had so many apartments on the market below $1 million. And at the same time of having those listings, the majority of them are losing money from the prices that I am telling them they need to list at. And the apartments are going like hotcakes. I mean, I think part of that has to do with the rental market is fueling the buyers. Rents are extraordinarily high. And when people are paying $5,500, $6,000 a month for a one bedroom, that delta between owning and renting is very small, if non-existent. And I think that's pushing a lot of buyers into the market. Also, I think with people having to be back in the city full time, I think there's a lot of people who left and they need a part-time place here. And I am seeing a ton of people that are boomers coming back to the city, selling their places outside in New Jersey and Connecticut because their kids and their grandkids are here in the city and they want to be close to them. So I am seeing a real big push in that market where I hadn't really seen that in the last couple of years, especially post-COVID, where everybody just wanted space, 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 space. It's interesting. I didn't hear what everybody else had to say, but it's interesting that Scott said he's seeing a lot of activity in the $2 to $4 million market. I'm experiencing the opposite. I'd be curious if that's mostly the Upper West Side, because that I could believe. The Upper East Side, between 2 and 4 for like larger apartments, 3 bedrooms, I'm finding those are flying like hotcakes. But I've been looking with buyers downtown in Chelsea, Hudson Yards. I have a listing in Nomad that's 325. And I just participated in a broker's tour. All of us were saying it's crickets. It's crickets. And I don't know, maybe we're just missed the market, but I'm not seeing that downtown as much. If it's on the Upper East or the Upper West, I am seeing those properties, larger properties, really move. I am recommending the majority of listings. I am telling my sellers they really have to be not even at market, but a bit below market. And that's even, lower than some things were last year. So I would say it's definitely a buyer's market. When we do this 1 to 10, 1 is like a super strong buyer's market, right?
Right, buyers. Yep.
Yeah. So I'm going to say like it's 3.75. It is in favor of buyers right now.
I like that. Decimals.
That's my 2 cents.
I love decimals. Yeah. Awesome. Thank you, Caroline, so much. So it's a little after 12. We have one more person. I don't know where Nikki went. She left, but Tracy joined us. Tracy, for some reason, your name says Mark D. Friedman. I have no idea why. Again, it's the AI is probably trying to do weird stuff. But anyway, Tracy, you there? No, you don't have to leave, Tracy. You don't have to leave. It's okay. It says Mark. It's okay. Okay. Well, I think I scared her away. That might not have even been Tracy. That might have not even been Tracy. I'm kind of getting freaked out. Oh, there she is, Tracy. You're on mute. I don't know what she's saying. You're on. Maybe she's somehow stuck in Mark D. Freeman's profile. I mean, I have no idea what's going on. But she can't. Oh, let me see if I can unmute her.
I'm everywhere. That's the thing. I'm everywhere you want to be.
I'll unmute her. Maybe is that what she's asking me to do?
I asked.
Yes.
I said to ask.
Ask to unmute. Yeah, I'm trying to unmute her. Everybody. It's not, you guys could try too. I think Mark and Noah may be able to try it here, but I cannot, it's not working, right? I don't know, Tracy. It's sad, but somehow you're Mark D. Freeman today and you are just unable to be unmuted. It's just a really, really odd thing. We can't figure it out.
And I can't do it over here either, Phil.
And yeah, so no one can really do it. And we also lost Nikki. So anyone have any final, it's 12:03. I did have one question for the panel on AI. If we could just address this. Has anyone experienced, this is important for agents listening, I think. Has anyone experienced buyers, perhaps you're friends with them, that said, I don't need a buyer's agent. I got ChatGPT got my back. And I'm kind of curious. I think that's probably some of the fear that AI might replace real estate agents. Does anyone want to chime in? Anyone have any experience with that?
There's no way.
Happening with buyers.
I got a feedback from a buyer who was using ChatGPT to buy and to rent. Totally failed. I mean, two separate parties. It's really because New York market is very unique. We also have co-ops that makes us. I don't know about the other markets, but I don't think they'll ever be replaced because of the kind of very complicated navigation of the New York market. So, Caroline, I want to hear what you want to say.
Yeah, Caroline.
I had a buyer come to one of my listings on the Upper East Side, sub $1 million market. This was a $650,000 one bedroom on the Upper East Side. She said to me, I came to your listing because I said to ChatGPT, give me the 10 best apartments on the Upper East Side to go see right now between $600,000 to $1 million. And she was a boomer. She was thrilled with it. She was like, this was so amazing. And I said, oh, could I see your list? And I said, could I see it? And oh yes, she was very happy to share with me what she put in and what her findings were, because it built her a whole matrix of different information. And my other listing across the street was also on the list. And then I said to her, actually, that's mine too. Do you want to go see it? And she said yes. And then I took her to go see that one. So I don't know. I mean,
and that's why Caroline pays $20 a month to ChatGPT.
I do pay for ChatGPT.
I do too, actually. I was kidding.
I do.
I love it so much. My team uses it. But to go back to your question, Phil, not only it cannot replace us, but it enhances our work. In terms of the environmental issues that many have brought up, I'm very well aware of that. And it's just so many things that we just need as a society to figure this out, including eating fish and meat that's really harming our environment in a terrible way.
Great.
So
go ahead, Fred.
Can you hear me?
Phil.
Oh, actually, yeah.
Sorry.
Yeah, Fred, just say that one comment, and then Tracy, we can hear you, so then we'll go to Tracy.
Thank you.
Go ahead, Fred.
Okay,
I'm here.
I would much rather hear Tracy than talk, but I will say that
Thanks, Fred.
I have one of my deals, and look, it has been a really busy market, but one of my deals is a direct. It's a $4 million Park Avenue co-op, and dealing with this dude and his wife with no buyer's broker has been a total nightmare. And in almost every situation, I would gladly give up the minimal amount of extra commission I'm getting to have somebody else handle the buyer while I'm handling the seller.
Absolutely. Thank you, Fred. All right, Tracy, just try to keep it tight. We're a little late, but if you don't mind, we'd love to hear
much to say, and I'm so sorry. Technology is working against me. Clearly, I need to upgrade from my i13, and now the camera's not working on my laptop. But here I am. Very quickly, I will say I'm a 5, not to be a cop-out, but I must speak on behalf of Florida. Florida also, Miami especially, West Palm Beach, has tons of culture, tons of industry. It is an amazing market here right now because it is still very much a buyer's market. It is not as Governor DeSantis advertised last November, Florida's #1 realtor, Mamdani. There has not been the influx, so there are still some fantastic bargains, and it's an amazing place to be. Things are selling and renting all over the map here. I agree with everyone else. Buyers are, it's insane how busy everyone has been, and I will say that a lot of people are actually turning to become buyers because the rental market is so insane. I also will just very quickly say that I am very against the pied-à-terre tax, whether it's not going to collect the kind of income that they might think that it will, and the optics are terrible. So with all due respect to Mark, I am the complete opposite position there. I have a lot more anecdotes, but if you want to hear them, just come message me afterwards. So sorry about my technological difficulties.
I think
we also use AI to virtually stage some of our listings, and would never, ever, ever, Fred, completely agree with you, completely never want to hear the voice of a machine in a letter of recommendation or love letter or anything else. But I do have some team members that use it for some of their email responses as well as their listing descriptions. But we just give it a careful human eye after that. So that's me.
Let me just be clear. All I said was that the pied-à-terre tax is not enforceable the way they're trying to use it. They have to revamp the whole tax code. So it's great that it's all political, but it's not going to happen. That's all I was saying.
Another idea that sounds good, but is actually going to be really terrible if it were ever even attempted to be implemented. Agreed.
Yeah, I think you guys are kind of on the same page there. All right, everybody. Thanks, Tracy. I'm so happy you got on the call. That would have been a disappointment if you didn't get on. And we'll have to find out what happened to Nikki. I'm not sure. So anything else? Last comments? It's kind of late. I really wanted to wrap up. I don't want to keep people too long. I think we're good. So let's just
congratulations, Naomi.
Thank you so much, Fred. Thank you. Thank you, guys. Great to see everyone.
Hold on, guys. Don't hang up yet. I want to just let everyone know that I want to send out a summary to everyone listening. You'll send out a summary, you can share it with your clients. As I always say, feel free to borrow any of it. If it gives you an idea, you want to use it in social media, you don't need permission from me or anyone on the panel, please feel free to do it. Big thanks to the panelists, everyone who joined. I love this community. We're still here. We're real. We're humans, and hopefully we'll keep on doing this for a while. And every time I do one of these, I'm reminded how much I just love everybody and how much I enjoy these. So thank you, everyone. I'll see you soon.
guys.
Feel free to come off and say goodbye. Until next time.
Bye bye,
Bye.
everyone.
Thanks, everybody.
Everyone, take care.
This primary